From the floor of the CME Group, this is Danny Riley on this Friday, September 17th. Whoosh! You know, it's been a long week, and we're into the option expiration today. Or the Sept expired this morning, and then you can trade these options until the close today. But in all honesty, the markets are very quiet throughout the entire trading floor. Now, we're going to start this out by saying something. You know what? There is no dress rehearsal when it comes to this, and there really isn't. Trading is they say it's a zero-sum game. Well, I say that's not true. Somebody's got to win, somebody's got to lose. And we try to make it so that when we're doing this, we lower that risk of people losing, and we try to add a little practical sense into it, and that's what we've been trying to do. Now, we're going to switch over a little bit. Next week, what I'm going to do is I'm going to come out and I'm going to bring a book to me to work with me, and I'm going to show you guys a book that I started reading a long time ago. I'm not going to tell you what it is now. I'm going to tell you next week. I've already talked about it, and it's a book that brings everybody back to one thing. And at a certain point in time, when traders were traders and there was no electronic trading, there was none of this e-mini stuff going on. And what it is, it brings us back to a certain thing that a lot of these old-time traders that made all this money years ago are still out there, and some of their techniques are still work, and nobody's paying attention to them, and nobody's using them. We're gonna get back to that on Monday. But here's the thing. I'll be straight out with you guys. For 2 weeks, nobody believed the market would go up. When we came out, I came out saying that I thought the market was going to go up. Everybody rained down on my head. Now the market, the S&P itself, has rallied over 90 handles, and everybody is now bullish. Well, you know what? I'm sorry, guys. That's not the way I play the game, and it's not the way we play the game at this desk. The markets were oversold, and the crowd got too deep into that on the downside. Now, as the markets have come back up, all these shorts have covered, and the question is, at what point in time do these shorts flip-flop and go long into the rally? That's going to be when we're going to say sold to the whole deal. Now, I'm not real big on these charts, and we tried to do something a couple days ago. And Tim from Top Notch pointed this out for me, so I'm not taking credit for it. But if you go back and you look at the June expiration, take your stuff back to the June expiration, you'll see that the S&P made a high going into that day, and then at the Monday preceding, it leaped up, and then it started a sell-off that brought us all the way down to almost the 1001 level. Okay, now we trade the markets here. Don't fall in love with this stuff. Get in, get out, take your profits. Don't think about it. This is the way it goes. Once you start to think that you control the market or you're smarter than the market, it's going to come back. It's going to bite you. It's going to eat you up. We don't want to see that. Now, what's happened here today is the volumes are really low. What started out with about 430,000 minis prior to the open, we've got about 1.4 million, about 1.3 million, so we've got about 900,000 minis traded. That's not bad for today, okay? Considering a lot of people are taking a walk. I can see it on the IM. People are kind of disconnecting throughout the day. It tells me there's not a lot of interest here. Now, the S&P opened up sharply higher overnight, and we traded up to 3270 in the SPZ. Yeah, we took out those old highs, guys. Now, don't fall in love with that, because that's exactly what we're talking about. Whenever everybody sees this thing going all the way up like that, they want to jump in, and the train's already left the station. Don't do that. What we want to try to do is we're strength, weakness guys. We want to buy the weakness, we want to sell the strength, and we don't want to do anything in between. You follow these patterns a little bit. Some of the rules that we're going to teach you next week from the book that I'm going to show you, it's really important to go back to this stuff, because people what they've done is they've made trading harder than it actually is. You know what, for the rest of the day, the S&P got down to the 1017 level, where Top Notch had a level at 1018. He had a bid in there, he pulled it, then the S&P rallied back up to, to the 1117 level, and then the S&P rallied back up to 1122, 1123, and we've kind of faded back out. We don't think that there's a lot of interest here. We think that the day was pretty much set in stone on the open. It started out firm, we've sold off, we suspect that the market will make its way back up a little bit, and then we're going to be looking at what Mutual Fund Monday's got to say. We don't have much left for here for the rest of the day. We'll talk to you Monday.